Hey, and welcome everyone to another session. So, there is a lot to unpack, there is a lot to uncover, and we're gonna dive into it today. So, the markets have actually fallen again. So, following upon last week's session, so this is actually gonna be part three of the special series. So, part two is on tariffs and part one is on what really is happening in the stock market. So this is going to be part three where we're going to actually be picking up on the tariffs and we're just going to dive into exactly what is happening in the stock market and just let you know everything that's happening and how to best invest and protect yourself against everything that's going on right now. So the markets have fallen again. That's right. The S&P 500 and the Nasdaq markets have actually been down. So the S&P 500 is down about 0.95% and the Nasdaq is down about 1.26 percentage. So what that really means is that since the tariffs were removed on Monday and the market was on an uprise, it actually came down again on Friday. So by end of day Friday, the market closed lower than it actually opened up. And to really understand what's happening, the Fear and Greed Index by CNN, which tracks really just how fearful or confident investors are in the market, is actually in a fearful state right now. So it's at 39, which it has been hovering at for about the past 2-3 weeks. But and similarly with the VIX Volatility Index, so it's currently up about 5%. So it's at 16.54 points right now, which shows that investors are still very fearful as to what is happening with the market. And look at the VIX, it really tracks the options market. So the option actually has various different contracts that you can enter into an agreement depending on whether you're a buyer or a seller. So you can actually purchase a call option or a put option. So the call option really is just the right but not the obligation as a buyer to actually purchase a stock at a particular price, while the put option on the other hand allows for the seller the right to sell but not the obligation to actually sell the share at a particular price. So what that means is that if, let's say, Apple is out and you're interested in purchasing Apple and the share price for Apple is $233, so by purchasing a call option, if you expect Apple to actually rise within the next 2 weeks to about say 240 and you see a call option out for about 234, then you'd actually just purchase that call option. So if it goes up to 240, then you'd actually purchase you'd express the option. And if it doesn't go to 240 and let's say it goes to 231 or 230, then what you'd actually do is not enforce that call option. So you have the right but not the obligation. So if the receiving partner know, if you enforce it, then they would have to obligate towards it. And similarly with selling, so if let's look at another stock, Nvidia. So let's say Nvidia is at $128 and you're expecting it to actually fall to, let's say, 120, then you can purchase a put option and you can set that put option. So if the stock does fall to say 120, 125, that's the price that you put for it, then you'd import the put option. But if the stock actually rises, then you won't enforce it. So that really is what options are. So it's just that insurance. So like some persons insure their health, persons insure their car, some persons insure their life, they insure their houses. So options really insure the stocks. So it just really protects you in terms of what you purchase or what you sell for the stock. And so as we look at the VIX Volatility Index, it shows that investors are now putting more of their confidence into these insurances, and so it's getting more popular than actually just trading the spot prices. And this is due to the volatility that is going to be experienced for the next few months, the next few years. And if this is your first video, then I'll encourage you to watch the second one, where we did spoke more in depth about the volatility and the tariffs on what is expected for the markets going forward. So right now, how do you protect yourself against what is happening? So as shared earlier, the one of the easiest ways to protect yourself is by purchasing options. So you pay a little bit more for the stock by purchasing the option, but it actually plays out in the long run, especially now with the volatility and greater trade swings expected to occur for the next few weeks and months. Options are really one of the best protections that you can have right now, especially for persons who are going to be purchasing and selling, but trading in essence more frequently. And even if you're not trading and you're investing for growth and value, then this is also a great tool to use as well too, and to have in your arsenal. So another trading strategy is, well, really the best thing that I can encourage anyone who is trading right now is just stick to your strategy. So a winning trading strategy always outperforms any hot tip or hot stock out there. So let's look at it this way. So there's this concept in economics called perfect economy. So what that really means is that any information is known would be reflected in the stock price. So let's say that Apple announces tonight that they're going to lay off 10,000 persons. And I'm just using Apple as an example. This has nothing to do with Apple or they actually making any announcement. But let's just say they announced they're laying off 10% of the worker, 10,000 persons. Now, by tomorrow, you'll actually be seeing this reflected in the share price. Scrap that. Even before tomorrow, from starting tonight, you'd actually see the share price being reflected during the closing hours trade and the pre-market. You're actually going to see. So if person see this as a good move, then naturally the stock is going to increase. And if they see this as a bad move, then naturally the stock is going to decrease. So before you even actually get to purchase or sell the stock tomorrow, the stock has already moved today. So that is what I mean by perfect economy. And so really and truly, unless you are getting insider information, which is illegal by the way, then any new tip or hot tip that you might get from someone or you hear somewhere, just know that it's already reflected in the share price. And so that's why I believe personally that a winning trading strategy outperforms any market, any hot stock, any day. So me personally, my trading strategy is more of the value investing, and personally I'm using dollar cost averaging. So what that really means is that for dollar cost averaging, you're just purchasing the same set of securities over a particular period of time, irrespective of the share price. Now, if you want more or further breakdown and explanation on the dollar cost averaging, I'll link the video in the description, so you can actually feel free to check it out, and then you can watch it and get that further understanding. So personally, I am just going all in on one or two stocks right now, and that's my trading strategy. And regardless of what's happening with the price, I'm just going all in. And that really is just because I made a personal decision, I made that personal commitment to myself that I'm going to grow my stock portfolio, I'm going to increase it, and I'm just going to go all in on one stock because, two stocks, but because right now I see the value in these two stocks. I like what they are doing, and that's exactly why I'm doing that. So I would encourage any person who's investing, anyone who's new to investing, to really pick a winning trading strategy. And then once you have that winning trading strategy, you just stick to it. So regardless of what's happening, regardless of what's going on in the market, you're just going to keep sticking to that trading strategy. So as much as the volatility will be going or happening in the markets, you're actually going to be investing regardless in whatever your trading strategy is. So whether it's to swing trade, whether it's to short the market, whether it's to go all in one stock, two stocks, three stocks, four stocks, then you just stick to that. And also, as we spoke about in the last video, you actually want to have a little bit more cash on hand than usual. So what that is, let's say you invest $1,000 every month and that's your trading strategy, then every month you know that rather than investing the $1,000, you want to have a little extra cash in hand. So if you can afford it, then I would encourage you to actually increase that, so you invest $1,000 each month and you have like another $200 to $500 just sitting in their account. So whenever the market dips, as had happened on Friday, then you want to just have that extra cash available, so whenever the market dips, you can just move it into the stock and acquire some more units at a cheaper price limit. So that really is it for today. So the as we shared, this is a part 3. So part 2 is on tariffs and part 1 is really on what's happening in the stock market. So I would encourage you, if this is the first video of that you're watching, to actually click and watch it, and I'll tag it at the end of I'll link it at the end of this video, so you can just click it and watch it. And that really is it. So this is just a special training as to what's really happening in the stock market, and just to encourage everyone and just to aid you in your investments and on your journey, and to get into that goal and that finish line, whether it's that $1,000,000, whether it's cash flowing, whether it's just to understand how investors think and how markets operate. Then that's all that really is the purpose of this video, and just really to educate and get you better knowledgeable. So thank you guys so much for tuning into this episode, and until next time, feel free to leave us a heart or a like anywhere you consume this material. Leave any comments down below. I love to hear from you all, and I love when you get in touch with me. And also subscribe or give us a follow wherever you consume this material, so that you do not miss out on any new episodes as soon as they are launched. Until next time, take care. Love you guys. Bye.